With the Fed expected to mention the possibility of tapering, the markets will absolutely be waiting in desperation. You came here for the truth, so let me unveil that for you. Today we're going to talk about a bunch of different topics, of course, that really lead up to what will be experienced in the near future. Everybody's talking about it, and this goes for those in the industry, the financial industry, but also regular people in the streets. Today I want to talk about the Fed. Number one, obviously with the meeting coming up, as you watch this video, it might be in the following day when we get that information. They've got a lot to say. We're going to talk about inflation as it relates to that. I've got Paul Tudor Jones. I've got Jamie Dimon talking about inflation specifically. So look for that, as well as the short squeezes of the day. You've got to stay tuned for this one. A lot of information. Let's go. The Fed repo operations continue to accelerate. Just giving you an update, $584 billion. This continues to grow. It's not going to stop anytime soon. Speaking of the Federal Reserve, Fed officials could pencil in earlier rate increase at meeting. As I said, as you watch this video, it's probably tomorrow, and I'm going to obviously be covering that very closely, so stay tuned to the channel, hit that subscribe button. Quarterly economic forecasts are likely to project significantly higher inflation and growth than Fed officials expected in March. Previous meeting, they said, you know what, it's going to be transitory, everything's going to be all rosy, but now maybe it's going to be a little bit higher than they expected, and that information needs to come out. Okay, so this is really walking a very thin line for the Federal Reserve. The Fed is in early stages of a campaign to prepare markets for tapering its asset purchases. So this was actually from June 7th, but I think it's very relevant to today. Comments by Fed officials in the past several weeks suggest the issue of tapering looks likely to be discussed as soon as next week's FOMC meeting. So they're not going, let me just make this very clear. They're not going to say, we are going to start tapering our assets. What's likely to be said is that they'll say something along the lines of, in the event that things are totally fantastic and there's rainbows and unicorns coming from the sky, then and only then will we begin to start the discussion of it. So they always put several pieces of criteria in the way of even the possibility of it. So we'll see what they say, of course. Now, they want to, as I mentioned at the bottom, this is the most key point, they want to avoid the taper tantrum of 2013. Just by tapering, even though it was at the slowest pace you could imagine, even though it was announced way before and it was so minuscule. Think about it. It took years for this to get down to $3.5 trillion in the balance sheet. And by then, they literally apologized just after that. They were apologizing. You know what? We really didn't see this. We didn't expect this. We didn't realize this and that. Apologizing for only having $3.5 trillion on the balance sheet. Speaking of which, the Fed balance sheet expansion, contraction versus the S&P 500. So you can see right here with these blue lines, this represents the monthly change in terms of percentage. So March 2020 came around, the Federal Reserve came in to save the day, and it's just showing you how much was pumped in such a short period of time. We hadn't seen anything like that since the financial crisis, and the total amount, not in percentage terms, but total dollar value far exceeded anything we've ever seen before. But now you could see that in terms of percentage, this has already started to decline. Maybe that will continue. We're going to find out in the near future. The markets are absolutely fearing hearing the wrong words and the wrong meaning, not more money printing, okay? Because they need that. It is extremely important. One other thing that I want to point out was 2018 being the most important year since 2008. Nobody likes to acknowledge this. I bring this up all the time. You've got these channels out there that simply promote this buy the dip mentality, but you need to understand what you're buying. In 2018, buy the dip actually did not work for basically the whole year. And the reason why was because they were scaling back their purchases. They were tapering. They were increasing interest rates. Nobody wants to talk about that, but it is true, and it is here. Jamie Dimon says JP Morgan is hoarding cash because of a very good chance of inflation being here to stay. They're effectively stockpiling cash rather than using it to buy treasuries or other investments, because the possibility of higher inflation will force the Fed to boost interest rates. This is coming from Jamie Dimon. Now, we don't know what's propaganda. We don't know what's being said, taking it out of context and so on. But this is really key as far as I'm concerned, because this is what I've talked about for so long. They just say, you get these people, one of these days I'll let it slip. But there's these channels out there in particular that millions of people are following, and they're telling them you don't have to worry because interest rates are going to stay low forever. The Federal Reserve is going to print forever. Buy the dip. Put all your money in, use margin. They're telling people to use margin. They're saying, buy my course, buy this, buy that. I'll tell you which stocks to buy and when. And this is apparently going to be okay. Because why? Oh, because I've been doing this for 6 months and now I'm a professional. This is dangerous. This is dangerous. The people who are listening to it, we're talking about millions of subscribers here, and they're going into something that they don't even realize this is a possibility. Higher interest, they've never seen higher interest rates. Okay? That's Jamie Dimon. Look at Paul Tudor Jones. He's saying that going all in on inflation trade if the Fed keeps ignoring higher prices. So remember that. I'll bring you the information. I'm definitely going to refer to this later on. So if you're here in the next couple days, stay tuned for this. I'd probably buy commodities, buy crypto, buy gold. If they course correct, then you're going to get a taper tantrum. All of this right here, major news, and I want to talk about this further in the Money GPS Insights. Number one, big players like Paul Tudor Jones, Jamie Dimon, they are calling for higher inflation. We should take notice. It doesn't mean that we have to flip everything that we're doing, take it, 180. No, we simply need to understand what they're saying. Number two, the Federal Reserve may begin to start talking about tapering, and just the thought of that could be very detrimental. Number three, the market right now, the stock market is extremely sensitive to this information coming from the Federal Reserve. So watch what you're doing here in the next couple days. Take a look very closely at the messages coming out of the Federal Reserve. It's not just the big boys out there that you should be paying attention to, because of course, Americans' inflation fears reach a fever pitch as consumer prices rise. So the people are already experiencing the sticker shock everywhere they go. They go to get a used car, it's 20% higher than the year before. There aren't many cases when used cars have been more expensive. Usually it leaves the lot and it devalues. Now the cars are going up. It's crazy. Of course, there are reasons for this. But you look at what's happening at the supermarkets and you look at what's happening basically everywhere. So people are already talking about inflation or feeling it anyway. And I think that's key, because it's not just Paul Tudor Jones. It's not just all these other billionaires and hedge funds and everybody else that's talking about this. I think that people are already starting to feel that, and it does take a toll. Bank of America's CEO says that consumer spending is 20% higher this year than in 2019. Obviously, 2020 being an issue, but 2019, normal year, you would say, and consumer spending is definitely up. Right at the bottom, they make it very clear, quote, people got a lot of stimulus money and they've been spending it. The unemployment rate is coming down. People are going back to work. So, of course, unemployment rate going down, actually comparing 2019 to 2021. But the point is, the stimulus money, I think that's really key. But are they going to continue to stimulate money forever? Who knows? I thought this was interesting. This right here is talking about oil. Oil has gone, it's just accelerated to new levels. And you look, at least in the last little while, some investors are wagering that Wall Street's preference for green energy will depress spending on oil extraction, check this out, setting the stage for supply shortages and higher fuel prices. So basically, more money is going into the green energy, whether you like it or not, whether you agree or not. That's where more of the money is going. ESG funds, all these things are really gaining a lot of steam. And then you've got potential for less interest in oil, and that could actually push the prices even higher. Unbelievable. Look at what's happening here, an issue that is, in fact, a trend that's been going on for a while. Washington Prime Group, a major mall owner of more than 100 locations around the US, filed for bankruptcy. This is going on all over the place. You could argue that this is okay because there's too much in the first place, but think about the jobs that are associated with this. Not just the people working in the malls, but think about the trades that are required to maintain these places, to build these places, to expand these places. This is a lot. It's a big deal. And I don't think that people have really understood how detrimental it can be throughout this period. Okay? Really quickly, S&P 500 dips from a record closing high as focus shifts to the Fed meeting. Now that was at 2:19 p.m. Okay, as I check over here, the market, the S&P actually finished in the positive. So right near the end of the day, it started rocketing higher after it had sunk throughout the earlier part of the day. And you've got stocks that have been going berserk. And some of them right here, as you see, here are the biggest short squeezes in the stock market, including Virgin Galactic and AMC. Further down in this article, you can take a look at what they show you, the biggest short squeeze. Okay, that's Virgin Galactic, more than doubled in 4 weeks. Okay, 27.82 sold short. This is going to be one of those that gets even more attention. Okay, you got Workhorse Group Inc., the most heavily shorted stock on the list, 40% short interest, and AMC fourth on the list with a 32% gain in 4 weeks, and it's got 25% short interest. So keep an eye on these. I know a lot of people are asking about this, wondering what's going on. And simply the continuing trend that more and more people, more and more businesses moving out of places like New York, like California, into areas like Florida, like Nevada. I'm seeing all kinds of places. In fact, Texas, of course, and so on. This trend is still continuing. I'm trying to keep you as updated as I possibly can. As always, I had more to get into, but don't have the time. If you want to get a hold of me, if you want to get these videos, because you know what's happening here, you know that these are being suppressed. Well, that's why I created the insiders. This email list is my way of getting to you. Okay, so 5 days a week, I email you the video of the day to entice you, to make it a little extra, sort of enticing. I want to give you something extra. If you sign up now, you get the PDF, which is called the 7 Critical Tips for Financial Education. And this right here will be emailed to you. You can get that right away. All you gotta do, sign up to themoneygps.com. If you found the video informative, hit that thumbs up button. And last but not least, check out this video. It was a very good performer. You definitely want to take a look, a lot of detail. Click it. I'll see you there.